Against that backdrop, Joseph, with the support of Andrew Crockett, made a number of enhancements. Further increasing the FSI's international footprint. Widening the scope of its work. And last but not least, launching FSI Connect, a highly successful initiative. Looking forward. When I arrived at the FSI in early 2017, I had a tough act to follow. Having said that, it was also very clear in 2017 that the financial system had continued to change. Furthermore, financial sector authorities must now pursue an even wider range of policy goals. In this new world, we felt there was a need to adjust both the services and products offered by the FSI and the way it interacts with its main stakeholders, basically the supervisory community. Enhancing our coordination with key stakeholders. Widening the scope of the FSI program of events to cover relevant cross-sectoral topics and increasing our outreach to senior officials. Exploiting FSI Connect more intensively to deliver online courses for financial sector supervisors. Supporting financial sector authorities through policy implementation work. As for the future, the FSI will be guided by the Innovation BIS 2025 strategy. As approved by the BIS Board of Directors last November. Expanding the offering of online training courses to cover more advanced topics and cross-sectoral themes such as fintech and cybersecurity. playing a more active role in addressing regulatory and supervisory developments related to technology and innovation. Providing support for financial crisis management through a library of previous crisis episodes and the coordination. Of exercises that test the performance of existing crisis management frameworks in a cross-border context. Continuing to expand our FSI Insights series with new comparative studies on regulatory and supervisory approaches with a special focus on technology and crisis management. As you can see, there should be enough to keep us busy in the years to come. Final remarks. Let me conclude these remarks with two thoughts. First, from its outset, the FSI has been constantly adapting itself to the needs of the financial supervisory community. With the aim of contributing to the BIS's financial stability mission. Second, the FSI today owes a great deal to three sets of people. The leadership of visionaries, including Andrew Crockett, Tom DeSwan. The hard work of the previous years, John Hyman and Joseph Tosofsky. The hard work over the years of every single member of the FSI's qualified and committed staff. The invaluable support of the friends and colleagues who are with us in this room today. I would like to thank you all for your continuing encouragement and engagement. Speech by Augustin Carstens. General Manager, Bank for International Settlements. Central Bank of Ireland, 2019 Whitaker Lecture. Dublin, March 22, 2019. Introduction. Good afternoon, ladies and gentlemen. Lecture. All of you here today know Ken Whitaker. Held up as a champion of economic reform, the man credited with laying the groundwork for Ireland's transformation into the Celtic Tiger. But you might not know that his reforming zeal was felt outside Ireland as well, even in Basel. Bis, during his term as governor between 1969 and 1976, as you can see from the class photos. The Bis archives contain an interesting exchange of letters between Dr. Whitaker and the then Bis. Chairman. The Bis to expand its board of directors to include a wider range of shareholding countries. Bis was not very receptive at the time, it saw any expansion as a slippery slope. Membership of the Bis and of its board to become, in stages, truly global. Dr. Whitaker was, as ever, ahead of his time. Banks, bringing together policymakers from all over the world to exchange experiences and discuss. Common challenges. Last year, my colleague Mark Carney gave a lecture here on the future of work. I will also look to the future, not of work, but of money, and, more broadly, the monetary system. The BIS's mandate is to serve central banks in their pursuit of monetary stability and to foster international Cooperation in this area. Interest in this subject. And should be seen as two parts of the same whole. Throughout history, technological innovations have continually reshaped the monetary system. Either by changing the nature of money or the workings of the payment system. Different. What seems new this time is the sheer volume of innovations and the fact that both components of the monetary system are targeted at the same time. Infrequent. Of money or to engineer new ways to pay appear almost weekly. This afternoon, I will share some thoughts on how technological innovation may affect the monetary system. Central bank digital currencies, CBDCs, would mean, not just for the system, but for all of us as citizens. The important part of the acronym CBDC is not the D for digital. Has access to digital payments. Our mobile phone, the payment is made digitally and often instantly. Instead, the important part of CBDC is the CB for central bank. People and businesses to make payments electronically using money issued by the central bank. Could deposit money directly in the central bank, and use debit cards issued by the central bank itself. What are the consequences of such a system? How would it differ from what we have now? James Joyce once said, A man of genius makes no mistakes, his errors are volitional and are the portals of discovery. Just brief personal disappointment. Attitude is common in the fintech industry. Just do it. Consequences of mistakes is for wimps. But central bankers do not think of themselves as geniuses, and prefer to tread cautiously into new territory. Before we open up the patient for major surgery, we need to understand the full consequences of what we're doing. We serve. Seriously endanger public trust in the currency and in the central bank. Therefore, grappling with the potential of CBDCs is one of the challenges common to today's policymakers, and certainly for tomorrow's as well. May not seem like a radical change to many of those used to shopping and paying bills online. Out that such a move is more consequential than appears at first sight. Thinking on the subject. The monetary system, how did we get here? Let's look back at how the monetary system evolved, taking money first. Of items served as money, including stones, shells, and cigarettes. Vikings, have been used for more than 1,000 years. Presided over 3 different currencies, the pre-decimal Irish pound with its 240 pennies to the pound. The decimal Irish pound, and the euro. At its simplest, in economic terms, money is what money does. Whatever form it takes, is to serve as a unit of account, a means of payment, and a store of value. Common measure of economic value, or a unit of account, makes our lives easier. Would be to compare the price of a pint of stout and a glass of whiskey without money. Near here and the barkeeper might tell you a Guinness costs €6 and a Jameson Gold costs €12. One is clearly dearer than the other. But what if the barter system were still in place? Cost 25 apples and a whiskey 30 oranges. Is usually the currency. Recall, shops in Ireland initially listed prices in both euros and Irish pounds. Many outside this building remember the official conversion rate of IEP 0. The second attribute of money is to serve as a means of payment. Cash, with a credit or debit card and, increasingly, even with my mobile phone. There is an important distinction between the types of money being transferred. Issued by the central bank. Bank, the phone company, or a big tech firm. Last but not least, money must be a reliable store of value. As a child, of cash for the school bus. I ended up walking all the way home. Its inverse, the value of price stability.